In this video, I'm going to cover the new statement from the SEC. I'm going to give my take on it as a regulatory lawyer who's been working with crypto regulation since 2017. I'm then going to move into the crypto AI market and talk about how I would be looking at putting crypto AI into my portfolio if I was chasing 2 to 3x returns this cycle, or if I was chasing 5x returns this cycle or more. So first, let's look at the SEC statement. The chair, Paul Atkins, says, "Today I would like to discuss what Commissioner Hester Peirce and I are calling Project Crypto, which will be the SEC's North Star in aiding President Trump in his historic efforts to make America the crypto capital of the world." So high level, I really enjoyed this statement. I think the biggest issue with crypto by far is the interference by the securities regulators. There are a lot of teams wanting to build valuable crypto assets, but cannot, at the risk of those crypto assets looking like securities, which then causes them to be custodied by regulated securities brokers. You need passports, licenses before you transmit or handle these securities. It's just not compatible with how the crypto on-chain infrastructure works. It's meant for a previous industry. It is not suitable for this instantly global, instantly online industry and technology. Here are some quotes that I liked a lot from the statement. "We are contemplating an innovation exemption that would allow registrants and non-registrants." So when he says registrants and non-registrants, he just means licensed financial professionals and institutions, and then non-registrants is just normal people who aren't in finance. "Contemplating an innovation exemption that would allow registrants and non-registrants to quickly go to market with new business models and services that do not neatly fit within our existing rules and regulations." Fantastic. "Innovators and visionaries will be able to immediately enter the market with new technologies and business models," that's key, business models, "but will not be required to comply with incompatible or burdensome prescriptive regulatory requirements that hinder productive economic activity. Decentralized finance and other forms of on-chain software systems will be part of our securities markets and not drowned out by duplicative or necessary regulation. I have asked staff to propose purpose-fit disclosures, exemptions, and safe harbors, including for the so-called initial coin offerings, airdrops, and network rewards." I love that. I love the ICO era. There were tons of scams, but it was a pure capital market. Investors who were good did well. Investors who were gullible did not do well. That's a pure capital market that crypto is truly trying to build towards. "It is my view that a Cambrian explosion in innovation could occur if we stay true to this course." That's a fantastic statement from the chair of the SEC. I look forward to seeing that actually come into light and builders are able to issue crypto assets that have a real value proposition and then not be punished for that. Now I'm going to move into crypto AI. I'm going to talk about the crypto AI market and how I would be thinking about these categories of assets, how to put it into my crypto portfolio, and why I would want to do that. And of course, that applies to you as well. I will say, when it comes to this topic, my thoughts are my own. In Yield School and New Market Trading, my companies, I am the founder, but we do hire many experts, people who run hedge funds, people who consult hedge funds, and they have their own opinions. And I know for a fact when it comes to crypto AI, we don't see completely eye to eye, but we do have generally thoughts. But nevertheless, these thoughts are my own and not thoughts that, say, represent my companies as a whole. In May, I spoke about AI agents, the different protocols that are building AI agents, and why you would want to invest either in the protocols that are building agents or the agents themselves. Last month, I talked about decentralized compute and inference, which is the process of training massive amounts of data through decentralized systems and then basically getting useful services out of those decentralized systems, how to invest in those pieces of infrastructure, what tokens or crypto assets, as I like to say, make sense and don't. So over the past 2 months, I've made a bunch of picks. Here's the performance of that. We've had some winners, we've had some losers. You can see I put a status, buy or watch. I haven't updated any of my opinions over the past 2 months. We've had great variability in the performance of these assets, and Non's minus 54, Vert AI is plus 50%. IO, I have changed from a buy status to a watch status. That project isn't making the progress that I would like to see. And Vert AI is still a buy. Now, for this video, I want to talk about crypto AI as a market and how to strategically have this asset in your portfolio if you're chasing 2 to 3x returns or 5x returns or more this cycle. And the reason I'm talking about this in this video is because, as a reminder, as I say in other platforms, I do genuinely believe that crypto AI will be the highest performing category of crypto asset this cycle. Now, there are questions as to whether there's going to be an alt season this cycle. People are seeing that many alts are 20, 30, 40% from their all-time highs. Meanwhile, Bitcoin is breaking all-time highs consistently. And so maybe this cycle is a Bitcoin denominated cycle and alternative assets are just going to be sitting in the background. I don't believe that at all. I'm of the opinion that we're going to see a strong alt season as online searches for Ethereum, Solana are hitting all-time highs. We're seeing increased activity in staking, lending, stablecoins. Stablecoin market cap is at an all-time high, and DeFi, TVL generally, all the amount of value of crypto assets in decentralized finance in the primary markets is moving up to its all-time highs as well. I definitely think an alt season will be coming. And I do think that protocols building in the crypto AI space and the assets connected to those protocols are going to be the best performing. Now, when you're looking at the crypto AI market, I think it's very helpful for the casual investor to recognize that there is an old camp of crypto AI assets and there is a new camp of crypto AI assets. Now, anything in the old camp is before 2024. So 2023 and older, I would put into the old camp of crypto AI, and 2024 and after is the new camp of crypto AI. So let's talk about what the old camp of crypto AI is. The old camp of crypto AI focuses on foundational infrastructure, protocols, and assets. They focus on things like decentralized compute, data marketplaces, and AI model training. So in this camp are some assets and protocols that we recognize, big names. We've got BitTensor with its asset, Tau. We've got Render with its crypto asset, Render. They do GPU rendering. And we have now what has become the Artificial Superintelligence Alliance. It's a mouthful, but the crypto asset is FET, multi-billion-dollar market cap asset. They provide generalized AI services and data to on-chain protocols. We've got the Near protocol, which is a layer one blockchain that has been specially purposed for AI integrated apps. And then we have Internet Computer ICP, which is trying to do a similar thing as Near protocol, but not as successfully. That is the old camp of crypto AI. The new camp of crypto AI, the section that I like a lot more, this is a section of crypto AI that focuses on agents, on-chain intelligence, agent swarm economies, agent builders, 2024 and newer. In this camp, we've got projects, protocols, assets like Virtuals protocol. Virtuals is basically an economic infrastructure for people to build, buy, and sell AI agents. We've got AI XBT. It's a AI-driven market intelligence service that people can pay for. We've got AI16Z. It's an agent that manages assets. We've got Cookie.fun. It's a data aggregation and data refinement platform that makes that data available for on-chain AI agents. We've got Vertical AI. It's basically a creativity application for people who want to generate content through a decentralized compute service. And we've got assets like Banker, which is a social and technical analysis bot that will also trade assets from you, that also integrates with the social platform X and takes instructions from people through X. It's actually very interesting and just got listed on the secondary market Coinbase about 2 months after we said it's probably going to get listed on the secondary market Coinbase. And so we've had a big gain on that asset since then. I am separating these assets into these two categories for the following reason. The reality is that both of these camps are directional in the same way. In this cycle, if we continue going up, there is not a scenario where the old camp does well and the new camp does poorly. Either they're both going to do well or they're both going to do poorly. Now, if I am chasing a multiple in my portfolio that's a 5x range, if I've got $1 million right now, or let's say $100,000 right now, and I want it to be 500,000 by the end of the cycle. Now, of course, part of my portfolio is going to be the blue chip assets, and these are not going to do a 5x multiple by the end of the cycle. And so I need to have a portion of my portfolio, anywhere from 10% up to 40, 50% of my portfolio reserved for these lower market cap assets that have more appreciation potential. And it's important that if you think I'm going to go into crypto AI because Frank and a bunch of influencers are saying crypto AI, it's very important that you recognize if you're chasing 5x returns, going with the old camp is not going to get you there. Tau is a 7 billion market cap. FET is a $1.8 billion market cap. Render is a $2 billion market cap. For these assets to do, say, a 10x or a 15x return by the end of the cycle, which is what you would need if you want your whole portfolio to go up 5x, I think this is very unlikely. These assets valuations are already so big. And so instead, if you are looking to get these larger returns, these larger multiples, it is much more likely that the new camp of crypto AI assets will be the type of assets to get the returns that moves your whole portfolio to a 5x from 100,000 to 500,000 or 1 million to 5 million. Banker, it's only a $90 million market cap. Vert AI, a $30 million market cap. AI XBT, $128 million market cap. Even if you're just looking for a 2 to 3x return on your portfolio this cycle, then I would still recommend pursuing my ends only barbell strategy. And in the low cap end of that barbell end strategy, I would still stick with the new camp crypto AI assets. I would just lower the percentage of your portfolio that you were dedicating to that asset class. So instead of 40%, I'd bring that down to 15% or 10%. I don't see a good justification for going with the old camp crypto assets at this stage of the cycle. When you're doing this yourself as an investor, some guidelines I would give you when looking at the new camp of crypto AI assets, I would want them to be 2024 or newer. I would want them to have a market cap of $250 million or less. I would very much like to see a revenue share or buyback mechanism within the protocol and service, something that puts genuine demand on the crypto asset that you're investing in or drives a value to it, something like an equity share, but obviously an on-chain version that isn't a security. That type of mechanism is something I like to see when investing in these protocols. It allows me to get an understanding of what I'm investing in and how far it could appreciate, because the market does like fundamentals. And if you're recognizing things early that have fundamentals, when the cycle kicks in, these projects are going to appreciate. Good examples that fit the criteria I just described include Banker. It includes Vertical AI, Virtuals protocol as well, though, to be fair. But the first time I brought up Virtuals protocol for our client base in 2023, it was a low market cap. It was in the new camp, but now it is a big multi-billion dollar asset that I can't rightfully say is going to be something that is going to do a 10x or 15x this cycle, but it's not a bad investment, and I hold some myself. So now I'm just going to run through some highlights that I found in the news to do with a new camp of crypto AI, and I'm going to run through this to motivate you to keep paying attention to this asset class and consider putting it somewhere in your portfolio, even just 1 to 5%, just like I ask my team to pay attention to this asset class. First up, General Impressions. General Impressions, they just released a crypto asset, Gen. It's been on the market since the 27th of July. It's only a $30 million market cap. And when I look to the protocol, or I look to the X page of the protocol, I see that the followers that I know that follow this page is Tim, who is the founder and CEO of OpenServe, another very legitimate project. The lead dev of Vader AI, again, a very legitimate developer. Yokai is the lead dev of General Impressions, and Sammy, who is the lead dev of Banker. So these are 3 other very high quality leaders in agentic systems on chain that are following this asset that just listed 3 days ago, 4 days ago, and is at a $30 million market cap. For this to do a 10x, it's only a $300 million market cap. For it to do 100x, it is a $3 billion market cap. And that is just getting to the level that Tau is at right now. You could get 100x for this if this was to go to the same level that Tau is right now. I don't know if it's going to go that high. It probably won't. But these are very reasonable asymmetric bets that make me pay attention to this asset class for this cycle. Gaia Labs, they've just raised $20 million to scale decentralized AI infrastructure. They're building the backbone of decentralized AI economy where inference is verifiable, agents are sovereign, and value flows directly to users, not platforms. 20 mil Series A. Some of the investors, Consensus, Outlier Ventures, BitGo, MoonPay, EVM Capital. These are recognizable, very legitimate funds that are backing another new camp crypto AI project. Questflow just raised 6.5 million. Questflow is scaling the GDP of the multi-agent economy for medicals on-chain, for billing on-chain, for finance on-chain, for payroll on-chain, a unified interface for autonomous AI agents working together on-chain. Again, this is the new camp of crypto AI that I think is going to produce very asymmetric returns this cycle. Etheric AI is actually doing its community sale right now at a $75 million valuation. Lead investor is Hack VC, very credible VC fund. Typically, I wouldn't be telling anybody to go participate in a community sale on a launch platform. No disrespect to Kaido, the launch pad that we're looking at here. It's just such a coin flip when it comes to these things. However, Etheric, they're an impressive protocol. Their lead developer is former MIT. He is a chief innovation officer for an AI think tank based out of Toronto. This is very interesting to me. Poseidon, they provide IP cleared data for people who are looking to use data within their AI systems. The team behind this, Stanford PhD, global strategy offer at Kakao Entertainment, and critically backed by A16Z Crypto, one of the leading venture capital funds in the world for cutting edge technology. Inference Labs, a new development team that has built this protocol, Omron. Omron has been on the market only since June 6th. It's at a $3 million market cap. For this to do 100x, it would only be a $300 million market cap, which is, I don't think that is maybe cracking the top 100 on coin market cap. And I've got no idea if it's going to do those returns. It probably won't. But again, this is just an asymmetric type bet that I like to pay attention to, because as someone who multiplied his portfolio 11x last cycle, I like to go for these asymmetric bets. And I like to go for these ones specifically because that way I can leave the rest of my portfolio in blue chips and let these aggressive bets do the 10x, the 20x that pushes my portfolio as a whole to a 5x return throughout the 1 to 2 years that constitutes the bull market in a cycle. So with this here, I'm coming to the end. This is how I think about the old camp versus the new camp of crypto AI, and how I would think about positioning that within my portfolio if I wanted to do 2 to 3x returns versus 5x returns. If I'm wanting to do 5x returns, I need to be looking at assets like this and making them 30, 40% of my portfolio. And if I'm only wanting 2 to 3x return this cycle, then I need to be still looking at high quality assets of this category, but then I can make it a much smaller 10 to 15% of my portfolio and let the rest of my portfolio be quite stable mid caps. And of course, the blue chips like Bitcoin, ETH, and Sol. Thanks.